What is going on, my friends, and welcome back to another video on the channel. Well, in today's video we are going over Polygon Matic, as it is making a very important move right now that could have many implications on what the future holds, especially within the next couple weeks and possibly even the next few months. So let's not waste any time at all and let's get straight into today's video. Now, in today's video we will be looking at the charts, but before we start with the Matic chart, I want to start with the Bitcoin chart. Now, the reason I want to start with the Bitcoin chart is that although we have been seeing something like Matic outperforming Bitcoin, realistically Bitcoin has control over the market. So when it succeeds, the market succeeds, and when it fails, the market fails. So we cannot ignore what is happening right now, which is this beautiful retest of the 200-week moving average. Now, the retest of the 200-week moving average is something that we did call in the last video. I told you guys, I said at some point we're going to come back up and we're going to retest this 200-week moving average. We have to, right? You can see the level of significance in which we held it back here during the virus dump. We held it back here at the bear market lows. We held it even further in the history back here in 2015 as we did enter, into the next run-in for our bull market. Historically, this level holds substantially. And so for that reason, considering we did see this breakdown below it, I knew at some point we have to at least come back to retest it. But do understand that if at any given point we do see Bitcoin break back above this 200-week moving average and continue up towards 23 to 24,000, the rest of the market is likely to run very, very, very rampant, very fast. But if we do get rejected here and do start to break back down below our $19,000 level, this is a failed retest. This rejection will very likely lead us down to the $16,000, $17,000 area, and that will likely drag the rest of the market down with it. So do not ignore Bitcoin at all, because it is going to have the majority of control on the rest of the market, no matter what Matic's charts specifically do look like. But I don't believe it is, the most knowledgeable thing ever to ignore Matic's charts, because it is giving us many implications of the possibility of a strong run to the upside. So let's break that down. So let's talk about what we're seeing. Well, first and foremost, Matic has been doing absolutely amazing over the last couple weeks, right? From the 18th of June to now, we've seen this amazing run to the upside. We've put in, some of these little local highs, we put in some higher lows, and we are looking to continue to the top side. Now, as this has happened, we are running into resistance at this key zone of resistance that we pointed out from these two previous establishments of support. Now, we said that 75 cents to 62 cents was going to be a very hard level of rejection, and we are going to struggle the most to get back above it. The reason why we pointed this out was because this is the level in which many bulls stepped in back in May of 2021 and back in July of 2021. The two times we saw the biggest crashes in the market, this is when the bulls stepped in. And the moment that we lost this level, we knew that this previous level of support was very likely going to turn into a level of resistance, and that is what we can see happening now. If we go out to where we are now, you can see that 75-cent level is where we hit resistance on this bounce, and this 62-cent level is where we have held support, run into resistance and rejection on many occasions. So at this given point, we are still with the goal of getting back above the 75 to 62 cent level, and we very possibly could be getting some indicators that may be on the way, of course, if Bitcoin does allow. So looking at this thing, what I'm noticing is, first and foremost, let's start with just some technical analysis of structure. Structurally, we're looking quite sound, okay? If we just clear everything off, what you can see is that we have this beautiful Adam and Eve or cup and handle pattern, whatever you want to call it, forming around 61.5 cents. We have, of course, what could be called the cup. We have then the handle, and a beautiful formation with the cup line sitting right around 61, again, 0.5 cents. Now, what usually will happen is that we will find major rejection on this line. And if we break above this line, more often than not, we will see these little breaks to the upside, as many traders and investors do find this to be the breakout, and then they do get a lot more bullish, leading them to make some purchases. So right now, the current game plan is to get back above 61, let's just call it 62 cents. If we're capable of doing that, what we're then going to do is give ourselves a breakout target that is going to be the distance from the top of the cup or the cup line down to the bottom of where the cup itself was formed, and that is then going to be your breakout target. And when applied to our line, that gives us a break up target of right around $1.25, right into this general region of mass liquidity that we saw back in the end of last year. Now, not only that though, if just in a case scenario in which we do go back up to retest this $1.20 area, that also does put us right around this range of, retesting this 20-week simple moving average, which I've told you guys we will do at some point. At some given point, we're going to come back up to this 20-week. We've held it as support, we've retested it back here. We attempted the retest back here. The 20 week is one of the most important moving averages on any given crypto's charts. Look at Bitcoin, right? Look how this 20 week has been the point of support and rejection on multiple occasions. It is extremely important. So again, at some point, we're going to go back up to retest it, and breaking 61.5 cents could very possibly be the start of the move that gets us back up to that 20 week. Not only that, though, we can see a clear change in momentum on the weekly MACD as we are moving into what could be considered bullish territory relatively soon with a few more weeks of green. And we can also see here that our weekly RSI has also broken this little trend that it was in over the last few months now. So for all of those reasons, momentum is very clearly changing, but it all comes down to, are we capable of breaking through some of these key levels, clearing this key level of resistance between 75 cents and 62 cents, and then using that momentum to continue back up to retest and clear that 20-week simple moving average. The only thing that does make me a little bit concerned about the price right now is what we are seeing, though, on the daily RSI. If we look at the daily RSI, we are still setting consistent higher highs, as you can see. Boom, but on the actual price itself, we are not doing so. We are still setting lower highs. This is generally a case of bearish divergence. So although we are seeing some bullish signs in forms of structure and price movement, our indicators are still, on the daily charts, are still giving us some little hints that some type of pullback to the downside is still very possible, especially if Bitcoin does get rejected off that 20-week moving average. So the best thing that I would tell you right now, with such a big mix of signals, we have bullish signals, we have bearish signals, what I would go ahead and say is the best thing to do right now is to set a range. Now, when I set a range, what I do is I set about 2 to 3 levels, and I say, if it hits this level, I'm going to do this. If it hits this level, I'm going to do that. And usually this allows me to react to the market no matter what happens. I can't predict the market. I can't predict the future. I have no idea what it's going to do, but I can, as a trader, put myself in a position to take advantage of the market no matter if it's going up or down. So the range that I'm setting right now, personally, is going to be right around this key area of resistance that we spoke about, and we're just going to call it 74 cents, okay? Now, as we do start to break into this zone, I may do a little bit of accumulating throughout here, as that does give us a new higher high, and that could very possibly say we're going into a short-term uptrend. So I may do a little accumulating in between 62 and 74 cents, but I'm not gonna do any major accumulating until we break 74 cents. At this point, I will then be convinced that we are going into some short-term bull run, maybe even back up towards $1.20 to $1.25, and I, of course, do wanna take advantage of what could be 30 to 40% in gains. But if at any given point we do start to see the price rolling back down and getting daily closes back below 45 cents, that is the signal likely Bitcoin got rejected, as we did mention, off that 20-week simple moving average, and Matic is likely starting to correct back towards 30 to even maybe the 25 cent area. And as I do believe at that point, the loss of this level puts us in doing something like this. I do believe that personally, I personally believe we could even see, this trend line get touched or something around these lower 25, 30 cent areas. And so I would start shorting Matic at the loss of, again, 46 cents, as I do believe max pain would be on the way from that point forward. So overall, it's very easy. It's a very easy system to understand. What we're going to do is we're going to make this green now, just to make this trade a little bit more easy. And what we're going to say is, at these points in which we are, possibly seeing 62 to 75 cents getting cleared, I will be doing a little bit of accumulating in these levels here, but I will be doing mass accumulation if we're capable of breaking 75 cents. If at any given point the price does roll to the downside and we lose 45 cents, I will be going short, expecting the price to at minimum revisit back towards this 35 to 38 cent level, right around where we put in these lows back here. I think that's very likely, and I think that is the most, this is the easiest way to position myself to be ready for any which way that this market does move, whether it's shorting and taking advantage of, what could be possibly 23% in gains on a short trade, or what could very possibly be a buy that gives us, some type of gain of, if it's up to $1.20 of 60%. I believe that there very possibly is between 25 to 50 to 60% in gains to be made, no matter what this market does. So I am preparing for it in both directions. So if you want to go ahead and give this a screenshot, I'm gonna put on some price labels for you. I'm not a financial advisor. I'm not someone you should just take all of your financial advice from. I'm just a trader who likes to give my opinion on things, and so you should just take it with a grain of salt. But this is what I'm looking for personally. Remember, Matic's not moving on its own. Bitcoin is going to be the deciding factor on what happens here, especially at this 200-week moving average. So pay very close attention to this and use this Bitcoin TA, use this 200-week moving average, pair it with your Matic technical analysis, and that is the way in which you set up for some fantastic trades. So with that said, that's going to be about it for today's video. I hope it was simple and straight to the point, as that is always the goal. If you did enjoy today's video, you can always let me know simply by smashing that like button and subscribing to the channel if you are new. And I will see you all next time. Peace.